Hi guys, sorry, just having a bit of technical difficulty there. How are you doing? Welcome to the session today. Solid as a stock. So hopefully the clue is in the name what we're going to cover today. You guys let me know, by the way. I know some of you join us quite regularly. You're in and out of our sessions quite a lot. Some of you, this might be the first time you've come across us. You might have just happened to find it. Some of you might have been trading for years. Some of you might have only just started trading. Some of you might trade the way we trade. You might trade in different ways. So let me know where you're at on those things. If you're new to this entirely, if you're a trading veteran, if you're a trade with UFOs veteran, so I can go into more detail if I need to on certain things. Just reading there from Joe. Oh, hi there from Jerry. Hi, Jerry. Seeing there from Joe. Use an auto climate on the 15-minute chart. Changing the amount of ticks on bars back changes the up standard downside results. What is the proper tick quantity to lock in for all futures? That is a question best put to Jose or to the support team, Joe. So if you email support@traddictiv.com, or just email Jose, he's good with stuff like that. Unfortunately, I won't be able to answer that as accurately as I would want to answer it, and I don't want to give you anything that might be slightly wrong. So email the support team, support@traddictiv.com, or Jose directly, and they'll be able to help you with that one. Cool. All right, brilliant. So as we can see here, I need to change that to say live. I don't know what to keep happening. Give me a second. Yeah, there we go. Cool. So as we can see that on the right hand side, that's my email address. So Becky@traddictiv.com. That's me. So you can email me as we go through the session. If you get confused on something, or at the end you're thinking that didn't make sense, or I wanted to explain this or whatever, just email me, Becky@traddictiv.com, and no worries, I will respond to you. Now, to me, there's actually a better way to ask me questions, which is that link that you see there on the screen. That's tradewithufos.com/Becky. Now, the reason that for me is a better way for you to ask me questions is because if you do that, you will be taken to this page. You can sign up for a free Trade with UFOs membership. And then once you've done that, you can ask a question in a public setting. Now, for me, that's a better thing to do because it means that the questions you have, probably somebody else has, so they can see the answers to it. Or you might be able to scroll down and see that other people have already asked the question that you want to ask. So it's more efficient for everybody. It might be that you come here and realize the question that you're about to ask has already been answered. It saves you time waiting for me to respond. Or you can ask a question here that other people will learn from later on. So it's best for the community to put questions in this page, which is tradewithufos.com/Becky. So you just have to sign up for the free membership in order to be able to post that question. So you just fill in your name and email, click through the steps and go from there. Okay, so coming back to where we're at here, I just need to make sure I go through the disclaimers. I'll show you those. Really technical problems today. There you go. So they are being highlighted there on the screen at the top. It's obviously important you guys know the legalities of this, but it's also important that you understand that, of course, when we do these kind of sessions, we're showing you a demonstration of how to use the technology. People will use it in different ways, on different timeframes, different markets, with different amounts of money, different risk tolerance. Some people trade live, some people trade simulated. So it's most important that you follow your own trade plan and what's best for you as an individual based on all of those different concepts. So just because I might place a trade in a session, or one of my colleagues places a trade in a session, doesn't mean you have to copy it if it doesn't fit your trade plan. So it's more to understand how we're using the technology so that you can then go and replicate that methodology on those variables that make the most sense for you. So hopefully that makes sense as a concept. As we go through, just let me know on the chat box if you have questions, if you want to clarify something or you want me to go over something again, no problem. So what we're going to do first is we're going to come to our trading view to look at the session, or to look at the trade that we put on last session. So I just want to check with you guys again. Some of you would have joined me last session. I know Joe was there. Let me know if you were there with me as well, so that we can see, so that I can see whether or not you're following the kind of narrative of this. So this was a trade that we put on last session, and I'll explain once we look through different opportunities that we have. I'll explain how we come to the point where we put a trade on anyway. But this was a trade that we put on. So just to see what's happened with this so far. So if this means nothing to you at the moment, don't worry. Again, if you're completely new to trading and it's all just lines and colors, don't worry. If you're a veteran, then bear with me as I explain maybe some of the basics that you might know. So this top black line here, where we see that we have our order here, that was where our entry was. This bottom black line, where we see where it says stop loss, that was our stop loss. This green line here was our first target. So as we can see, we put this trade on and it came in and it hit our entry around about here, which was, we put it on a couple of weeks ago. So that happened last week. So it hit here, very nearly hit our stop and then moved away. It's hit our safety target already. What that now means is we are at safety. The worst that can happen is that we break even. The way we do our targets is we take half of our profit off at 1-to-1 and the other half we'll take off at a further point, and we let the objective movements of the markets tell us where we're going to take that. I'll explain that a little bit later on. So once we've hit our safety target, it could be that the price goes off and hits a final target and great, we make loads of money. Or it could be the price comes back, it moves against us and it hits our stop loss. If that happens, the worst that's happened overall is we break even, because we took half off at 1-to-1 and then we lost half, which is the other one. So we win half, we lose half, we break even. That's why we have our safety target. So far in this trade, we are at safety. Now, at the time when we put this trade on, we didn't have anywhere objective on the chart in order to take our final target. So what we did, I've got this little note here. What we did here was trail our stop. So what the idea of this would be is that as new green UFOs that we can see here, as new green UFOs would appear as price moves up, we would move our stop behind the green UFO. So let's say price was to move up from here and we got a green UFO around about there, then we would move our stop from here to just beneath that one. And that was our target there. That was the way that we were going to trail our stop and lock in profit as price moves in our favor. Now we want to look at it today and then decide what we want to be doing with this trade, whether it's still a valid trade. Now, for me, we still have a confirmed upwards climate. Again, if you're completely new and you don't know what that means, don't worry, I will get to that and explain it. For those that do know what I mean, hopefully you'll be following. A thick blue dot on our auto climate tells us that we have a confirmed upwards climate and probability to the upside. So it's still a good idea for us to be in a long trade. It's still a good idea for us to be in this. We don't need to cancel it out at this point for any reason. Now, what we do have here is a new red UFO. So what we can do, and what I will do in this case, is put in a second target here for this bottom number here, so 146.24. So that takes us to around about here. So that would be where we're going to place our target now. We could still just trail a UFO behind it, like trail our stop behind new UFOs, but I would rather have an objective kind of set it and forget it target there. So I'm just going to add that here. It's going to open up the order panel, which should open. I'm having a real technical problem today. That might just be taking a little while to load. Okay, I'm going to come back to this then. When we place a new trade, hopefully if I come back to this will work. I might need to log out and log back in again. Apologies for that, guys. Okay, so for those that know how to put your second target on, then we would be placing our second target at 146.24. That's now going to be where our final target would be. So once the order panel is figured itself out, I'll show you how we do that and how we work out what the risk to reward would be on that. I'm just going to draw a line in here to put on the chart where we want to be. So I'm just going to draw that line randomly on the chart. This is true with any drawing tools, by the way. Draw it anywhere and then double click on it and you can be much more specific as to where you want it to be. So I want this target line to be 146.24. That's going to allow me to be, it's going to be visually easier to track what's happened here on this trade. Now, what I'm going to do, I am going to come out of that and then come back in, and hopefully that will mean that we've got our order bar working on the side there. So let's just do that quickly and we'll go from there. Okay, so in the meantime, whilst that's loading, and we'll let TradingView do its thing and load, I just want to come to the FX Street economic calendar. Now, why do I want to come here? We do this because we want to know if there's going to, or if there's likely to be, volatility in the trades that we're going to be placing. Now, this is a stocks session. Most of the time we're going to be looking at, or nearly all the time, we're looking at US stocks, US-based stocks, stocks that trade on the US stock exchanges. So, to me, it makes sense that we understand what is happening in the US. Obviously, there's been a lot of craziness recently. It always is around elections and things like that. And of course, it's been a little bit heightened with COVID and the craziness of the world. So for me, I want to be aware of, are there things that are likely to happen that we know are coming up that could add more volatility to this? That's not to say that you're going to decide not to place a trade at all. It might be that you keep your risk a little bit more defined. Maybe you halve the risk that you would normally do because you're trying to keep yourself safer. Obviously, if you're on the right side of volatility and it moves quickly to your target, then great. So it's not to say that volatility should make you avoid trading entirely unless that's how you choose to react to it, but at least be aware of it. So for us today, we have a speech by Biden at 2:45. This is Eastern time, so New York time. So 2:45 Eastern time. So something to be aware of. Again, not necessarily going to stop us trading, but just to be aware of it. I've filtered here, by the way, by this week. I choose this week. I choose high impact, and I choose the United States. So that's how I filter by that. Now, we might want to look at next week as well. If our trades are going to last a few days to a few weeks, again, we might want to be aware, for example, here, next Wednesday, looks like a particularly or could be a particularly volatile day if all of this news is having an impact on the markets. So again, we might want to look at that and say, maybe I want to close out some of my position by Wednesday or something like that. So we use this information to help us manage our trades. So hopefully that makes sense. So then what we want to do, what I like to do here is come to TradeStation. It doesn't have to be TradeStation. It doesn't have to be TradingView. These are the two platforms and two softwares or platforms that I'm using here. If you use other platforms, other brokers, other charting software, no problem. The process is the same. Now, the thing with the apps that we use and the technology that we use is that they work on TradeStation, they work on TradingView. Now, if you don't use TradeStation as a broker and you use actually quite a lot of other brokers, you can connect those brokers to TradingView. So even if you don't have a TradeStation account, even if you don't have a TradingView account and you use a different broker, you could potentially connect your broker to TradingView to be able to use this technology and then place your trades, and it will route through the broker that you want it to go through. But that's something you can look on the TradingView website to have a look at that. You can get a free account with TradingView as well. Okay, so what I like to do first is just I'm going to look at the ES. And why am I doing that? I'm doing that because this shows us the futures market that is a summary, essentially, or a reflection of the S&P, which is the top 500 US stocks. Now, why do I want to know what's going on here? First, I'm just going to change this to a daily chart for a second. Why do I want to know what's going on here? Because if the market is on its way up overall, then the stocks within it are likely to also do that. So we have correlation there, a correlation between an individual stock and the basket of stocks that it's in. If we have an individual stock that's going down while the rest of the market as a whole is going up, that's a bit of an anomaly there. And it could mean that we would have less probability to the downside because potentially the force that's pulling all of those stocks to the upside might counteract that. So for me, it's not essential, but I always want to be focusing on, I want to look for opportunities that align with what the market as a whole is doing so that I have that extra correlation, that extra bit of probability in my favor. So just looking there at the daily chart so I can easily see what's going on. We have a daily chart down here on the left-hand side as well. And we can see from this that we have a thick blue dot. So again, I mentioned it earlier, a thick blue dot on our AutoClimate app tells us we have probability to the upside. So we have likelihood of price moving upwards. That's not to say we just go and press buy at whatever the price is. There's more to this. There's more steps to take, more to the methodology. But at least it's that first question answered. First question is always, make that a little bit smaller. Should I buy, sell, or do nothing? That's what I want to know first of all. Doing nothing is fine. In fact, if anything, that's going to happen more often than not because we don't want to be placing trades for the sake of placing trades if the probabilities aren't on our side. If we're placing trades and risking money, we want to make sure we have probability that it's going to work out in our favor. Of course, probable or probability doesn't mean definite, doesn't mean guaranteed. So it could be that we have probability, but of course that doesn't mean it's definitely going to happen. So we still manage our risk, but before we even start, we want to make sure we have probability. So question number one, should I buy, sell, or do nothing, is answered by the AutoClimate, which essentially here is just red dots and blue dots. If it's a thick blue dot, confirmed upwards climate, probability to the upside. If it's a confirmed red dot, for example, there's one here, that would tell us that we have a confirmed downwards climate, probability to the downside. If it's a thin dot of either colour, so we've got a couple there, if we've got a thin dot of either colour, that's the AutoClimate app's way of telling us lack of probability, no likelihood one side or the other, do nothing. That's the answer to that question, which is do nothing. So at the moment, the current dot here that we have furthest to the right is a thick blue dot, confirmed upwards climate, probability to the upside with the market as a whole. So for me, that means I'm going to go and look at stocks that have probability to the upside. Now, there are 3, 4, 5,000 stocks, many stocks that you could choose from within the US stock market, let alone outside of that if you're trading stocks in other parts of the world. So in terms of figuring out what your watch list is or what stocks to look at, there are many different ways of doing it. Some people do it by doing fundamental research. It might be that you look at Disney because you like Disney films, or that you look at Apple because you've got an iPhone. I personally try and stay more objective and try and keep all kind of subjectivity out of it. I want to know where I have the highest probabilities, so that's where I look. So what we have here are scanners that we use. So this first one here that's highlighted, you'll see it's directional, and then it's got a D in brackets, which is daily, and it's got a little up arrow. You might not be able to see that, but trust me, it's a little up arrow. So this scan here is filtering through all of the stocks that it could do, and showing us where we have probability to the upside. Now, again, that's not to say we just go and buy these random stocks at whatever the price is now. We still have to go through a process, figure out whether it's still going to be worth our time and money to put our trade on. If not, no problem. We just move on to the next one. If so, no problem. Then we put the trade on. Either way, it's based on probabilities and objective fact. Where do we have probabilities? Let technology tell us that, to save us having to do all this decision-making process as subjective human beings. Try and keep it technological and methodological if we can. So what we see from this is that this top one here, W, so if I click this, that will sync with the other charts. I'm just going to make sure that we're looking at the right time frame here, 55-minute here. This will now show us, this is Wayfair, this will now show us this stock that we already know, the scanner has told us this has likelihood to the upside. So good. Now, we can then come down here and just double check things. So as we can see here, thick blue dot, confirmed upwards climate, probability to the upside. Now, those of you that have been trading the Trade with UFO way for a little while, you might notice, if I just pull this over a little bit just so we can see those numbers slightly better. There we go. Okay, so you might notice the sustainability stats here. Now, for those of you that are new to it, no need to worry about that so much at the moment. The more sessions you attend, the more you'll get this. But as we can see here, if you know what I'm talking about, this first number tells us how many candles on average that market usually moves to the upside. This second number here shows us how many candles on average that market usually moves to the downside. And this last number here, that shows us how many candles we are currently moved to the current up or down. So at the moment we're moving up. This tells us that we have been moving up for 10 candles. Whereas usually, as an average, the market would move up for, I'm going to round that number up, 8 candles. So what that means is we've gone past what is statistically likely in terms of a continuous move to the upside. Now, for me, if it's only slightly past, I will still look at that as an opportunity. It's still something that I might decide to do. Again, it's up to you to be strict on that. You might say if it's gone past what is more probable to happen, then I'm not looking at it. Some people might say if it's 50% more than the average or 100% more than the average, that's where you cut it off. The most important thing is that you are consistent on that. That will depend on your tolerance for risk and how you feel about that individually. It's okay to be subjective when we're making our minds up as to what rules that we have. And the most important thing is when we have those rules, we stick to them so that we behave objectively, so that we're not changing the rules as we go, which then makes it really hard to figure out what's working and what's not. So in this case, although it's gone slightly over the sustainability for me, I'm still happy to look at this trade. So we've already answered question number 1, which is, if I buy, where do I buy? If I sell, which is, should I buy, sell, or do nothing? Question 2 is, if I buy, where do I buy? If I sell, where do I sell? So just because we have probability to the upside doesn't mean we just go and buy something at random, whatever the price is now. What's the likelihood that the time of day that you're around to sit down and look at the charts and sit down and place a trade is the best time of day to trade something? Or is going to come with the highest probabilities? It's very unlikely that those two things happen to coincide, the time of day you're around and the best time of day to do something. So we want to be placing trades in advance. We want to be placing limit orders, not market orders, waiting for price to get to objectively higher probability areas before we start placing trades, before we start getting into trades. So we're not just going to go and press buy right now. So what we want to know is, if I'm going to buy, where am I going to buy? And this is where second piece of technology comes in. So we've used AutoClimate to answer question number 1. We are using AutoUFOs to answer question number 2. By the way, AutoClimate is a free app, so you can download it for free on TradeStation and on TradingView. All you need to do is just go to tradewithufos.com/Becky, get your free membership and go through from there, and you'll find yourself on the pages where you can download that and go from there. AutoUFOs is a paid-for app. It's $34 a month on TradingView and $89 a month on TradeStation. So again, some people just use AutoClimate to help them out a little bit. Some people use AutoUFOs as well. Again, it's up to you to decide what you need to do and how you're going to do that. Now, what do we use AutoUFOs for? What AutoUFOs are doing are highlighting to us areas where we have probability to do the thing that we want to do. So in this case, we want to buy. So we can see here that we have green UFOs and we have red UFOs. So green UFOs show us where we have probability to buy. Higher probability is a better place for us to buy. Red UFOs show us where we have probability to sell. So what we want to be looking at here then are our green UFOs, because we've decided we want to buy. So we want to be looking at where we have higher probability to buy. Now, UFO, by the way, stands for unfilled order. So although they look like little flying saucers, little unidentified flying objects, it does actually stand for unfilled orders. Now, why is that important? Because essentially what the UFOs are doing is they are highlighting for us where there are buy orders waiting to be bought or waiting to be filled, and where there are sell orders waiting to be filled. So when we go in and out of a market, we press buy and sell. What those are buy orders and sell orders. The more buy orders you have, if you have more buy orders than sell orders, price goes up. Supply and demand, it's a common thing in life. If you have more sellers than buyers, more sell orders than buy orders, price comes down. So what the UFOs are doing is highlighting and going through many points of data in the charts and in what's going on in the background, volume and ticks and things like that, to be able to come up and say to us, these areas here, these areas in price, these ranges of price is where we see bigger stacks of buy orders, meaning probability that if price were to hit these stacks of buy orders, they would go up from there because buying is coming into the market. So hopefully that makes sense. Let me know if you're completely new, if that did make sense as a concept. If not, I can explain again. If so, then great. Just let me know, give me feedback as we're going, guys. So we now have a third element here. We have two UFOs, and sometimes you'll see that there'll be many. You'll have some here and some here and some here. How do you know then, if you have multiple UFOs on the chart, how do you know which one to pick? We don't want to just be placing, especially if we're trading certain things that ties up margin before we're entered into a trade. If we just place 5-6 trades, perhaps use up all of our allocated margin to be waiting on trades, wouldn't it be better to know which of those UFOs has highest probability? So now there's a third element that we use. So what we're using here is the EMA. Now EMA, or MAE, so this is moving average exponential, or it could be exponential moving average. What that is it's simply an average of the last, in this case, the last 9 candles. So we use this on this bigger time frame here. So you'll notice our AutoClimate, we're using a daily chart. For our AutoUFOs, we're using a 55-minute chart. So AutoUFOs is always on the smaller of the two. The AutoClimate and the EMA is always on the bigger of the two. In terms of the timeframes that you use, again, that's something that you can choose. For us, if we're swing trading, we're going to use a daily chart to answer question number 1, and we're going to use a 55-minute chart to answer question number 2. So we have our EMA on our bigger of the two timeframes, in this case, a daily chart. Why is that important? So the EMA is an average of the last 9 candles. Essentially, it's a line that moves through price that's showing us what the average is over the last however many pieces of data. Now that's important because it is one of the most common indicators in the world. Any platform in the world pretty much is going to have moving averages or exponential moving averages that people can apply to their charts. So everywhere all over the world, people are using moving averages to help them make trading decisions. Oftentimes, let's say, for example, I'm just going to draw a random EMA on here. Let's say that's what it did. In theory, if price is above the line, like in this random example here, my arrows being weird, then if it comes back and touches the line, you would expect it to go up from there. That's the theory. That's what people are using when they're using this for their trading decisions. If price is below the line, then in theory, if it comes back up and touches the line, then you would expect it to go down from there. So essentially what we're expecting from the moving average is that it will attract buyers and sellers. Now, it's not just retail people that are doing that, it's also hedge fund managers will use that kind of technique as well. Now, not always. You can see if you plot a moving average on any chart, you'll see that price obviously moves through these lines as well. So it's not always going to work out that way. But if we have buy orders coming in because we have UFOs there, so we have evidence that there are buy orders there waiting already, and the EMA coincides with that, then what that tells us is that we have buy orders for one reason and buy orders for another reason coming in at the same place, which increases our probability that we have more buy orders that push price up. So we'd rather get in there. We'd rather make sure that when we're placing our trades, we've got as many probabilities as we can. We already have probability to the upside anyway, because the climate tells us that. We have probability of price moving up from these areas anyway, because there are buy orders there. And we have an additional probability that more buy orders come in at that EMA price that help push it up. The more we can have on our side, the better. Now, in this particular case, our EMA is 290.98. That's the EMA value. So what I'm going to do, I'm just going to take a horizontal line, draw it anywhere on the chart. So this is true when you're using drawing tools on TradeStation and TradingView. I'm going to double click on that line. And I'm just going to type in what the EMA value is, which is 290.95. And I'm going to click OK. So that line is now moved to where the EMA currently is. And you'll notice, by the way, the EMA has just moved from 290.95 to 290.97. A couple of minutes ago, it was 290.98. Clue is in the word moving. It's a moving average because it's using price data to move. So it will move. So we need to anticipate that kind of thing. So at the moment, we have an EMA which is above our UFOs. So what do we do with that information? Now, something that we need to think about is that we do need to anticipate that as price moves down, so too does the EMA. So the EMA will move down with price. Now, will it move down at the same rate in order to coincide with this UFO at the right time? We don't know that. So what I would suggest for you guys is when these kind of things happen and we've got to anticipate and we're not sure, is set an alert close to what your entry would be. So that once that alert goes, it's much, much closer. It's much easier to anticipate what's going to happen with that EMA to see whether everything's lining up for you to take that trade. Now, of course, you might decide you don't want to have the EMA as part of your methodology. You just want to use the UFOs or vice versa. You might have other reasons why you get into a trade. Again, no problem. It's up to you to decide what you do. For us, the reason that we're doing these stages and the reason that we have them all is to increase our probabilities. So hopefully that makes sense as to why we do that and why we have these rules. At the moment, I'm not sure whether or not that's going to line up, so I would just put an alert in there to see whether that works out. So no trade for this first one, so we just click on the next one. So again, we need to be comfortable with the fact that sometimes we're going to not place trades and that's okay. Because if we place trades for the sake of it, we're wasting time and risking money to have a higher probability of losing money. Doesn't make any sense. So it's okay for us to do a little bit of analysis and decide not enough probabilities there and move on. So looking at this one there, so Zeus, Olympic Steel, quickly we can tell from this one, we have a confirmed upwards climate, probability to the upside. We have UFOs, buy UFOs here. However, our EMA value is 15.42. So just to draw that roughly, that's going to be round about here. Round about here. So what that means is, obviously, our UFO is nowhere near our EMA, and price is just underneath the EMA at the moment. So if price was to move down, it would likely move underneath the EMA and therefore not be lining up in the way we want it to anyway. So no problem. We move on to the next one. So I'll click here at Zion's Bancorp. Again, the good thing with using an objective methodology that's based on technology is you don't even have to know the stocks. You don't even have to know the companies. Of course, if you want to layer on top of that some fundamental research or anything like that, of course, by all means, do things like that. But you don't need to, is my point, which is quite nice. So again, we can see here very quickly, yes, we have a confirmed upwards climate. Yes, we have green UFOs, but our EMA is 27.22, which takes us to around about here, which again means it's quite far away from this UFO. If price were to come down from where it is now, see that again. So it's around about here. If price was to come down from where it is now, it's unlikely that the EMA will follow it to line up here exactly where it needs to be. So again, no problem, we just move on from there. Now, obviously, we've now run out of the symbols that are already being shown to us from the scanner as to what has probability to the upside. So what we can look for, or essentially what this is also looking for, is certain components that make sense with options. So what we can start to look for is maybe major stocks that we can look at, maybe Facebook, Microsoft, things like that, to just see if we have opportunities there. In the meantime, I'm just going to double check and see whether we have TradingView working. There we go. We've got our order panel up here on the right hand side now, which is what I was trying to get to earlier. So I'm just going to show you here what I was trying to do in terms of taking our target here. So at the moment, what we did last time, for those of you that remember that were here last time, we essentially bought $100 worth here, and we have $100 worth of stop loss here. But on our safety target, we only took off $50. So we took off half of the position. So what we want to make sure we do is take off half of the position here. So it looks like, 17 was the amount of, is the amount that's left. So we want to make sure that we have 17 shares worth. So we're going to click sell. And we can put this in here and just put that in there at 146.24. And that we want 17 shares worth. And then we can just click sell, and that order will go in. So now we have a limit that will sell here if price hits that, which was relevant to our target that we had up here based on the UFOs. So UFOs are helping us not just to get into a trade, but to get out of it as well, to understand where we have probabilities or where we'll start to lose probabilities in our favor. So we want to get out before that happens. So we now have a second trade in there, or a second target in there. So we'll see how that pans out. Obviously very close to price right now. Very, very close. So it might be that we get out of this trade for a profit today. It could be that price just drops and hits our stop loss. But hey, no problem. We're already at safety, already at break even. So it wouldn't be too big a deal if that happens. So if we come back to TradeStation so that we can maybe look at some different stocks. So let's try Facebook. You guys let me know as well, by the way, if you have stocks you want me to take a look at. Just let me know. Just type in the chat box, whatever it is, whatever's on your watch list, whatever stocks you want to look at, and we'll see what we have in terms of opportunity. So with this one, again, we can be very quick in seeing this here. So yes, confirmed upwards climate, probability to the upside, great. We have green UFOs. Our EMA is 265.08, which is here. Again, in the middle of nowhere, not near UFOs. We don't have those two elements of probabilities lining up, so we move on. And again, let me know, guys, which ones you want me to move on to. I'll go through the major ones, I guess the more popular ones that people are used to trading or would at least know what the companies are. But again, you guys tell me where you're at. So in this example, same situation. As we can see, price is up here and we've got no UFOs right the way down to 127.94. So with our EMA, 132.47, that's here roughly. Again, no UFOs around there. So we move on. Next chart. Let's try Google. Okay, just looking quickly. That one also unfortunately looks like it won't be working out. So we have a confirmed upwards climate, probability to the upside. We have our EMA value at 18.88. So let's call that round about here. Now, what we could do with this one, in fact, maybe we will for the sake of an example of putting on a trade. What I would normally suggest with this is that you set an alert, because if price were to drop quickly, it could be that the EMA moves slightly down and we would coincide with this UFO. That's a possibility. It's not, we don't know, obviously, again, this is anticipatory, and it depends on how price moves. If it moves quickly, if it moves slowly, if it continues to move up, if it goes sideways for a bit. So it will depend on how price moves. So what we would want to do, again, is have an alert on slightly closer to our entry. So we put an alert on maybe around about here, around about the 1800 mark, so that we can then see by that point, if price does come down there, is it lining up with the EMA with our UFO? Now, what I'm going to do, I'm going to keep this in mind in the background, because I'm going to look through a couple more examples first, if we can find one that lines up better. If not, we're going to put this on, assuming that we would have an alert. We could always cancel this trade if it doesn't line up properly. Just seeing there, Christian has asked, what if price is under a green UFO? So price will never be under a green UFO. Good question. So unfilled orders, for there to be unfilled orders of buy orders, people always want to buy below price, right? So you don't want to buy something at more expensive than it is right now. You're always going to want to buy something either maybe at the price right now or cheaper than that. So where the orders are going to be waiting is never going to be above price, because people don't want to buy something more expensive than it already is. So hopefully that makes sense as the logic there as to why that is the case. So you'll always see, if I squidge this down, we may not see that on this chart because a lot of stocks are at all-time highs, but what you're likely to see is red UFOs above price and green UFOs below price. Just because, again, if something is valued at a certain amount, sellers want to sell it more expensive than it is, buyers want to buy it cheaper than it is. So we want to be waiting for price to come down a little bit to then get into a place that's got objective probabilities that price then goes up from there, because there are buyers waiting at a slightly reduced price. So hopefully that makes sense. Okay, let me know if that doesn't. I can come back to that concept. So like I said, we'll keep this in mind for the background. If I can't find anything in the next couple of minutes, let's potentially put this trade on as an example of placing a trade. But we'll try some other examples now. So let's try Microsoft. Okay, 220. So again, nothing there. And again, you get quicker at this as you start to know what the methodology is. We know very quickly that if the EMA is 220.84, which is maybe here, we know that, again, it's in between UFOs, that there's unlikely to be something coinciding here. So we just move on to the next one. Let's look at Netflix. I think that's the symbol there for Netflix. 540. So again, exactly the same situation. What's likely to be happening with these bigger stocks is, because we've seen such a big push in the last, well, it seems to be consistently making all-time highs at the moment. So we've got these huge gaps. We've got moves to the upside with no price data. So the closest buy UFOs that we can find is down here, because that's where the closest data is. So closest UFO starts at 502.63, maybe slightly higher than that for this top band of it. But the EMA is 540.77. So it's hit. Again, middle of nowhere. We don't want to place trades in the middle of nowhere without probability. So let's try McDonald's. 212.27. Brilliant. Looks like we have an opportunity here, guys. I'm glad we found that so that I can show you the full process. So here we have confirmed upwards climate, probability to the upside, which means we want to look to go long. For those that understand sustainability, we're also well within the sustainability stats. Usually the market goes up for 7 candles. We're on candle number 2, which means we have probability of a continuous move to the upside, which is helpful. If we want to be in a trade that takes us to our profit target, the more time we have to be in that trade, the easier it is for us to hit our targets. So again, don't worry if you're completely new to this and sustainability doesn't make sense, but just know that we have an extra point of probability as well here. Now, we have different buy UFOs. Great, we have areas to buy. We want to figure out which one's the best. So we come over to our EMA, which is 212.29. That brings us to here, which is just within this UFO. So we have buy orders coming in below price, buy orders coming in for various reasons. A lot of the times for the software to even pick up that there are enough buy orders there to show. If there are enough buy orders, more than likely it's probably an institution, it's the big boys that are having enough orders for it to be picked up, that there are orders there by the system. So we have buy orders coming in here that are likely to be from larger market players. We also have likelihood of buy orders coming in when the EMA is met by retail traders around the world, also by hedge fund managers. So we've got many things in our favor here to make this trade more likely to make us money. Again, it may not, which is why we're going to manage our risk just in case. So what we're going to do, I'm just going to draw, I've got Fibonacci lines that I'll just draw randomly over here. By the way, if you're a little bit confused there by my Fibonacci lines, just because they don't look like normal Fibonacci lines, I have deliberately customized them. If I click there, I have deliberately customized them and just check marked on here 0 and 100 because I don't want to see all these other lines. For me, that's not relevant right now. That's not what I want to use my Fibonacci lines for. That's just me. I use my Fibonacci lines only for a drawing purpose. If you use Fibonacci for how it is intended to be used, then obviously you might use a different drawing tool to help you with this. I put the drawing tools around price because it just makes it easier to visually see after the fact what happened. Now, why have I circled or why have I encompassed both of these UFOs? It's because, so if we take this top UFO, I'm just going to freeze price here. So I've just clicked and held on the UFO here to get this information. The top price of the UFO is 212.85. This number here, 212.68, that is showing us, just looking there, yeah, that is showing us where this meat is. What we want to know is where's the top band. So here, that's 212.85. I think I moved that a little bit when I did that. So 212.85. Now, the end of this UFO, there we go, end of this UFO is 211.17, which is like here-ish. Now, what's the problem with that is that there's another UFO there. So we don't want to be putting our stop within a UFO. That doesn't make sense because we're going to be selling out as more buy orders are coming in. So we want to make sure that if we're going to put our stop loss below UFOs, that it's below both of these, so that we're allowing there to be movement there, so that if price moves through this top UFO, it might hit the buy orders just below it and move up from there. If it moves through both of them into this white space, into this middle of nowhere space, then we were just wrong on the trade, right? So we want to make sure that we've given ourselves some room there. So the top part of this UFO is 212.85. The bottom bit of this UFO is 209.63. So I'm just going to type those in. I'm going to double click on the Fibonacci lines. And I'm going to come to data and I can just type those in. Rather than try and move the lines to get them exactly where I want to get them, that would drive me crazy. So it was 209.35, I believe. Might have been a slightly different number. 209.63. My apologies. So we'll do that again. 209.63 was the bottom one. So you notice now when I click OK, that it's just moved there to do that. Now, although this was the bottom number, we want to give it a little bit extra space for our stops, just a little bit of wiggle room. I personally like to put on just 10 cents. Again, you can have your own rules as to what you do as long as you are consistent and as long as you have a reason for your rule. So mine is 10 cents just to make it a nice round number, just to make it easy to do, easy maths, less error. So I'm now going to just change this number to 209.53. So I've given myself 10 cents worth of breathing space then. Okay. So this is my entry, this is my stop. Where's my target? So if I was to just squidge this a little bit, so we've got a little bit of room to show you where a target would be. Now, where am I going to put my target? I want my target, my first target, to always be 1 to 1 away. So it's a really easy equation here. Now, what I'm actually going to come and do is come over to TradingView in order to make this easier maths, quicker to do. So let's come across here and make sure that we are looking at McDonald's. Okay, and do the same here. So we're looking at the same thing on both charts. For some reason my TradingView is a little bit slower today. Okay. So the UFO that we had, for some reason doesn't seem to be appearing here on this one. Let me just double check that we're on the right thing. Perhaps it was through a different... Different broker. No. It might be that I've got the configuration slightly different. Okay, so I'm going to use the numbers that we already saw on TradeStation there, rather than fiddle about with making sure the numbers are the same. So I'm just going to draw randomly my Fibonacci lines again on here, just so I've got it as an easy reference. So it was 212.85 and 206.53, I believe, or 209.53. Forget the numbers. 209.53. Okay, so let's do that. 209.53. Okay, so if I come here and I come to the order panel here, I can type in my entry, 2.12.85, and then my stop loss, 209.53. Now, how is that helpful? That's now telling me how many cents. So it says pips, but it just means the smallest increment of price. So it's 332 cents. So obviously $3.32 between entry and stop. So if I want my target to be 1-to-1 away, rather than me do that maths and work it out and then add it on top to figure out where my target is going to be, I can just click take profit and put 332. So it's now worked out for me. That's where my safety target needs to be at 216.17. It's even showed me here that it's a 1-to-1 ratio. Now, normally what I do on these examples is I'll use $100 total risk. So $50 on one target, $50 on another target. So I'm just going to put $50 in here. Again, what TradingView does that's really helpful is I put in $50 and then it will tell me how many units that is. So how many shares I'd actually have to be trading in order to risk $50. And then I just click buy. So I've got my entry, my stop loss, and I've got my safety target. I'm going to put my safety target in as a drawing tool as well, which was 216.17, I believe. Okay, so there we go. I'm just looking there at the chat box. You can use the snap tool instead of typing in those numbers quicker. Yeah, I have one of my colleagues uses the snap tool. I don't like it. It annoys me. It's just the way I am. I don't know, when I use it and it snaps to things if I don't want it to snap to things, it just frustrates me, but that's my personal thing. So yeah, however you do it in order to make it easier or quicker for you. Okay, so we've got safety target in, great. Now what we want to do is we want to see where our second target would be, our final target. So I'm going to put on UFOs over here on the left-hand side chart. As we can see here, it doesn't look like we have any red UFOs above us here. That's because we've got kind of spiky price. So we'll do the same thing as we did with the last example. We'll put in an entry and stop with a target that we'll take away. We'll put in an entry and stop, and then we will trail our stop behind price as it moves in our favor. So what we'll do here is we'll put in 212.85. That was our entry. We have 209.53, that's already in. We want to risk $50. And actually, we don't need to put the safety, the final target in for now. So we just click buy. We'll now see that what's going on is that we have two lots of buy limits, one's on top of the other. So we've got two lots of buy limits, two lots of stop losses, one profit target, and no other profit target. So let's say price comes back into our area and starts to move away. If it hits our safety target and continues to move up, then we're at safety anyway. Worst that can happen is we break even. If a new UFO forms, then we move our stop from here and we'll put it behind this UFO. Price continues in our favor, makes a new UFO. We move our stop from here and we put it under this one. And then that way, if price was to then move down, we get stopped out at this price, meaning we get stopped out at a profit. And overall, we'll take a hopefully reasonable profit out of the trade. But worst comes to worst, if we hit our safety target, we'll break even. Or worst comes to absolute worst, we get entered, price goes straight through, we get stopped out. We take that risk when we trade. We know that is a possibility. But we put as many probabilities in our favor as we can in order to lower the chances of that kind of thing happening. So that is an example of putting a trade on start to finish, going from the auto climate helping us make these decisions, coming through to the auto UFO showing us where we're going to buy or sell, using our EMA to coincide with it so that we increase our probabilities, and then placing trades using, I prefer to use TradingView because it does a lot of the maths for me. I don't need to do it in my head or figure it out and get it wrong. using TradeStation and or TradingView to help us with these trades. So hopefully it makes sense so far. Hopefully you followed me. If you didn't, don't worry. If this is the first time you've looked at anything trading, I don't expect half of this to have made sense. So just keep following us in all of the different sessions that we do with my colleagues as well, Jose and Boyan and Andrew, and myself. I do them every other week, more or less, on stocks. We do Forex and futures and options as well. So the more you attend these sessions, the more they'll make sense. If you have questions, you can email me. My email address is becky@traddictiv.com. There you go, just about fit. Or you can come through and go to the public space here. So www.tradewithufos.com/Becky. Get yourself a free membership and then ask questions publicly so other people can see the answer. If you have a question, they probably do. So that's it from me today, guys. We luckily got a trade on in the end. I know we went through quite a few examples, so glad that we got one in for McDonald's. So we have one in now for McDonald's waiting to enter, and we also have the one from last week that we are just currently waiting to see whether or not it hits this second target or whether we get stopped out and we overall break even in that trade. So when we come back next time in a couple of weeks, we'll reflect back and see what did happen with these trades. Did we win? Did we lose? What can we learn from them? Where did we go from there? And we'll place new trades as well. Okay, all right. Glad you guys, Johnny, very clearly explained. Okay, good, brilliant. I'm glad that it's going in. Like I said, any questions, let us know. Happy trading. Be safe out there, guys, and have a great weekend. Take care. Bye bye.